Hey everybody, what is going on? It's Bill with Franklin Loan Center, and something we hear all the time is that the filthy rich people in the world avoid paying any taxes because they never actually take any income. They just borrow against their assets. Loans aren't a taxable event in most cases, and so they just take out a loan instead of reporting a bunch of income, right? So that's like, but where does that leave the rest of us that aren't filthy rich? And how can we take advantage of it, right? When most of us, our biggest asset is our real estate, right? Whether it's our primary residence or investment properties or whatever it is. In a lot of cases, that's the biggest asset we have. And a challenge that a bunch of us have faced is that, shoot, we have if we've owned it for at least since 2020, then, we might have a interest rate with a 2, a 3, or, maybe a 4 in front of it. And so refinancing that thing to take out some equity in it, it's a tough pill, right? I mean, like that's not even gonna be fiscally responsible in most cases. So it begs the question, like, how do I tap into this, right? And look, we're not maybe trying to do the filthy rich, strategies here. But like, why would you want to tap into equity? I mean, hey, maybe you want to consolidate debt. Maybe you're looking to buy additional properties, use some of the equity in this house, buy another one, let that cash flow. Maybe that's what you're doing. Maybe it's just to start, bleeding off some of the estate that you have to watch people enjoy it while you're still alive, right? So what are some possibilities there? Well, one that everybody thinks of right away is a HELOC, home equity line of credit. It's a great tool, and it works great in a lot of cases, especially in cases where you just need to use the money and then you have a quick payback on it, right? So it'd be almost like, it's essentially like using a credit card, except it's leveraged against your house. So if that's the thing, if you're just looking for it for just quick use, gonna pay it back in 2, 5, 6 months, something like that, a home equity line of credit can be great because then you can use the money, you pay the interest on whatever you use, and then you pay it back. If it's a longer term, so it's something where you're going to buy real estate and you're going to hold it or something like that, you might want to think about a home equity loan. And in that case, it's just a fixed rate, right? You can do a fixed rate for 10, 15, 20. You can even do 30-year fixed loans on those, right? They're going to come at a higher interest rate, and again, everybody's situation is a bit different, but if you have a pretty good size first mortgage with a really low interest rate, and then you're going to borrow some equity on it, you probably just want to take the higher interest rate. I always help clients do a blended rate to just see, like, okay, could it make sense to just do a refinance? In most cases, that's not what we're seeing. We just do these home equity loans. So that's another possibility. The last one that we're paying a lot of attention to, this is mostly for people only 62 and up, is the reverse mortgage. The nice thing about a reverse mortgage is you can just completely get rid of your payment, right? You just let the payment accrue. Yes, there's an interest rate. Most people don't have a general understanding how reverse mortgages work. And it can be a really great plan for people. Again, you have to be at least 62 for the HECM mortgage, which is kind of the main one that people use. And then a bunch of lenders have now actually ruled out a reverse second mortgage. So for people that have that first mortgage at a really low interest rate and they are comfortable with making that payment, but they want to tap into some equity for any of the reasons we talked about a minute ago, they can grab that, a reverse line of credit. Of course, the main difference here, the reverse line of credit does not, the second mortgage line of credit does not have a payment, right? So it can be a really cool way to go. There's no one size fits all. So it's always a function of like, hey, let's sit down, let's figure out the whole story, and we'll figure out what works best for you. But hey, you want to play like the super rich, borrow money against your assets in a sane, healthy way. It could be a great way to go. That's all I have today. I'm Bill. I'm with Franklin Loan Center, and I'll see y'all next week.